All right. Next, I want to take a look at the commodity markets. Okay, I'm not going to spend a whole lot of time on them. You guys can check the market prices on your cell phone any day, every day, but it's worth, I think, analyzing it a little bit more closely. Old crop corn. Who's got some old crop corn they need to get marketed? Yeah, that's most of American farmers are sitting on old crop corn. We've got about 12 billion bushels outstanding. So what are we going to do? We're in an uptrending market. This morning, I pulled this chart out at about 9 o'clock this morning. We tapped out above 370. That has been a line in the sand for this old crop corn market. We've moved above it. We'll see if we can close above it today. But if we do, I want to watch that rally move up towards 390. We've been trading roughly 350 to 370. Technically, once we break over that 370, we'll flip that range and we'll go 370 to 390. If we don't break through that 370 level today, I want to be very aggressive making some sales anytime I'm north of 365. Then I want to let the market trade right back down as more corn comes on the world scene, and then I want to re-own that grain sub 350. Buy call, buy the futures outright, find a way to put 10 cents when that market begins to climb again on those bushels. For the next 20 years, the producers that can find an extra 10 cents, those are the producers that are going to be successful long term. We need to rethink our marketing strategy. We've got to get back outside the box here in American ag. I want to look at old crop soybeans. Who's been watching this market? Holy cow. This has been just a roller coaster ride of a market. Old crop soybeans exemplify, to my mind, some of the factors that still remain in our industry post-2008. 2008, remember, we had those funds come in. They started to aggressively trade on the Chicago Board of Trade. They're going to keep doing that, but they're not always going to be buyers. A lot of the times they are going to be large sellers. Right here in the old crop soybean market, we had aggressive farmers selling right at harvest, heading into the end of the year, generating some cash flow. So we saw ownership transfer in a large way to speculative folks, and a lot of those trade algorithmically. Their systems scan headlines looking for anything that could be bullish or bearish, and that's what they base their trades on. That 80-cent jump was thanks to flooding in Argentina. Most accounts are we lost maybe 5% of Argentinian acres that can't be replanted. Not a deal breaker in the world of global soybean production, but it was bullish enough that it caused some pretty exciting moves in this market. We saw funds take aggressive positions in the soybean trade, a tool that's out there for every farmer, for every producer, for every elevator, for every person who's interested in the markets is right here. Right here. It's the Commitment of Traders report. Does anybody make a habit of reading this report? It comes out every week. It's worth keeping an eye on. You can find it. It's published by the CFTC, and it's always a week delayed, but it still contains information on who is trading our industry. I look at it quite a little bit to give me some insight into what could be happening. We're looking at three classes of traders on the Commitment of Traders report. The dark line to the downside, those are folks that have shorted the soybean market, and the dark line is commercials. So every time elevators buying grain from a farmer, they're selling it on the board, and we get that large net commercial short when farmers are selling. The light blue line going to the upside, that's speculative investors, large-scale spec funds, and it's kind of tough to see, but there's a little yellow line, that's small specs. That's if you and I decide to call our broker and sell 2 contracts of soybeans. What we've seen happen, looking back 3 weeks, we see that massive spike in spec ownership. They were aggressively buying soybeans for the past 3 weeks. What does that correspond with over the past 3 weeks? Aggressive market movement. Once that position starts to grow, there's only one way that folks can take their money, take their profits out of the commodity market. If you've bought, what do you need to do? Sell. So once we start to see large ownership, We need to get concerned about large-scale sell-offs because they can move the market to the downside just as quickly as they can move it to the upside. Take a look at new crop here, looking out at December corn. Holy cow, same story. We are currently looking at a massive carryout in this country. USDA's projected, as of last WASDE report, I didn't see the one today, 2.355 billion bushels of carryout domestically. Largest ending stocks, I believe, in history in the corn market. That's keeping a lid on prices. But on the flip side, we've also seen absolutely incredible demand. Ethanol production has been running like it's going out of style. It is phenomenal. We see strong exports relative for this time of year. We see growing feed demand, and we see excellent ethanol production. That's keeping a floor under this market. We're doing the same story. We're looking at checking out that $4 mark. Once we hit $4 on the board, we know there's going to be a lot of farmers selling, and we'll probably break right back down below it. We're going to be range-bound in this trade. The nice thing is it does look like the range is moving up and to the right, which is the direction we want to see as grain producers. Looking at new crop soybeans, this is a high-risk, high-reward market in 2017. It's high reward because we can lock in profits right here for most producers. We can look at average yield. We can go times 1026 minus basis. We can go, hey, I'm in the black. I'm excited about soybeans. The other aspect of the reward is it's a low input, relatively low input crop to grow. That keeps bankers happy. We do have a bunch of factors lining up to grow a lot more bean acres this year. Now in Iowa, in Illinois, Nebraska, are we going to see big swings in acreage? I don't think so. But do we have any North Dakota folks here? A couple of you. You guys going to see more beans? Yes. I was up in Minot about 3 weeks ago. Beautiful time to be in Minot, North Dakota, by the way. January 16th. But it was quite nice. It was sunny. It was a balmy 18 degrees. They were all in shorts. It's a whole different world. Get up there. But those folks that I was talking with, those growers, they are hopped up on growing some beans this year. Exceptional yields the past couple years, a lot of enthusiasm to plant that crop. The idea that we could see, I believe it was Farm Future survey, 90.6 million soybean acres, 90.4 million corn acres. This is a year we could see more bean acres than corn acres. First time we'd seen that since 1983. That's the risk in this market. Big crop coming out of South America, big crop potentially going in the ground in this country. Eventually, we're going to have a large carryout. I say that, and I always get folks, they say, Mike, USDA has underestimated soybean demand for the past 15 years. Yeah, that's true. They have. They've substantially underestimated it. We continue to draw down those carryouts year after year after year. Stocks get tighter and tighter as we work through the year, but one of these years, USDA is going to be right. One of these years, we are going to catch up to that massive global bean demand, and we will satisfy it. And when that happens, will it be 2017? I don't know. But it will happen at some point. It happened in the corn market. It will happen in the bean market. There's a lot of room to the downside. I want to be very, very aggressive protecting profitable price levels in the bean market.